That's what we're going to be talking about this week, building that narrative from the auction theory. But let's take a look at what we had on gold this morning. This is a 15-minute gold chart. And again, we've got the same indicator on the gold here. And what I've got now is I've got these pivots. So if I put in the pivots at the moment, well, what is a pivot? A pivot is liquidity, isn't it? A pivot provides us with liquidity narratives. So if the pivot provides us with liquidity, then of course the idea is that when we get this coming in here, when I get this storyline coming in here, then of course what I'm looking for is I'm looking for the liquidity. Well, there it is. See the black line? So there's the liquidity. So last night we got this buy trade in gold at 30. The buy traded gold at 30 traded a high price swing eventually of 39, nearly 40, made $1,000. So again, we saw this example here where we're getting a buy trade. So I see where the liquidity is, and you can see that that candle was rejected. So obviously at that stage there at 8 o'clock, my decision is I've got to cross in to get that business done. We get a buy trade there around about 36, and it rallies up to a high price of 44 for another $800. We get a buy trade here. Well, the nearest liquidity is away back here, so I'm a distance away from being able to get a buy trade on. Pity, because obviously what happened was we then rejected, and obviously if you decided to chase based on the liquidity, you managed to make some nice money. Now, I never got that trade. Must have been in bonds or something at the time, but I never got the trade on at that stage. And obviously you've taken a trade from 37s to a high price of 40s. And then obviously the last trade that we had was just here. You can see it for yourself. So we get the buy trigger on this candle here. We see where the liquidity is in the background, so I can draw that liquidity on my screens. So there it is. There's the liquidity. And of course, what we're now looking for is we're now looking to test it down into that liquidity, which you can see quite clearly happens on this candle. So we went long into that at 36s, and you can see we've managed to rally to 40 for a $400 profit on gold. So another nice series of trade outcomes on that. So decent. Let's see how it holds up. And obviously, again, you can do the same thing of looking through multiple time frames to see if it continues to stack up. And if we do that, you can see what you can see. I mean, if we go up to the 1 hour gold chart, there's only one trigger available on it, and it was a sell trade on that spinner candle this morning. Almost exactly the same price as the oil sell, interestingly enough. And that was right on the top of the hour at 9 o'clock. Everything seemed to happen at that point in a lot of the markets today. So we got that trigger coming in at that stage. And obviously that resulted in this very large sell-off candle here, which went from 44s down to 32s. So yeah, I mean, obviously you can work your way through all the various time frames, finding different types of triggers. If we look at it from today's session on a 5-minute chart to see the trades, you'll see we had a 5-minute fade buy trade here, but the liquidity is miles away, so that's going to be a challenge. But it still made some nice money. You can see we went from 38.5 to a high price of 43 for 500s. We had a fade trade in here, and again the liquidity is there, but the pin shows it's a massive liquidity drop down into that area. So that's a challenge again to get long. But if you did get long at about 37 halves, traded a high price eventually of about 39 halves or about 200s. There was a buy trade in here. Of course, there's your liquidity there at 36 halves. Traded a high price of 40s, so another 400. So that's all the trades we've had today. I'm not cherry picking them. You can see for yourself. I've not had any other trades. If we go back into a bit of history, then of course we can find some of the other trades on a 5-minute chart. It's away back at 1 o'clock. And you can see back at 1 o'clock, here's a beautiful bit of liquidity here. So there's the trade trigger there at 1 o'clock. And it's a buy trade at 30. And obviously a buy trade at 30 rips beautifully higher for $1,400–1,500 over the overnight session. So, it's not a bad trade. It's not, especially when you trade the Tokyo Open. If anybody still trades the Tokyo Open, then of course it's a trade that we know very, very well indeed. In fact, we mentioned that Tokyo Open trade almost the first day we got started in the classroom here. So well over 40 years ago. So, when we see these types of trade ideas, again, it's an idea. It needs to fit some of the other stories. We're looking for some of the other narratives. You can see that gold's now ripped to target liquidity there. You can see it for yourself. We've ripped to target liquidity off of that buy trade there. We got in at 36 and a half, and it's just touched into the liquidity there at 40 and a half for 400s, and that is pretty good right there. So lovely little trade, and target achieved on that liquidity there. So brilliant.